All right, good morning, everyone. It's Thursday, October 13th. Let me just get a couple people up here. So we're just trying to set up the streams to Twitch and YouTube so that you guys can listen to these later on, but having a little bit of trouble with the YouTube side, but should be fine. We've got a lot to discuss today, and a lot of interesting people to discuss it with. All right, let's get started. Welcome, guys.
Who's got the CPI news?
CPI 0.4%, way higher than expected. We're going blood red today.
Rest in peace, American economy.
SPY dumped like how much?
And this is why I held on to my GM puts.
Do we have core CPI numbers as well?
Yeah, I've got it. Core CPI 0.6%. Normal CPI 0.4% against 0.2% expected. Yearly CPI 8.2%.
Oh, wow. The market is crashing. Holy shit.
That is straight we close.
Yeah, this is no bueno.
And there we are, sub 350.
SPY went from plus 1.5% after that the UK news to minus what is it now? 1.8%.
Yeah, and this is why, I'm shorting all the indexes in Europe. I also added the short QQQ puts basically yesterday. Because this is obvious, like in the next months. I don't know, guys. I think you are not following on the geopolitics news, right? I think you can clearly see the escalation, right, of the Ukraine and Russian issue. And yesterday, basically, NATO and the EU, as always, very stupid policies they are betting on. They say that they will go all in supporting Ukraine. Okay, that's a very clear message, and I think that means a holy shit of a crash coming in the financial markets, and inflation will keep raising. The cost of living is going to basically blow up. The majority of people's savings and borrowing power, you can see already in the UK the effect. And UK is always a good reference because it's a very small country. They are very independent, like they have their own, the Bank of England. It's not like in Europe that local central banks do not have independence. And they rely on Central European Bank or the US, which is a very big economy. And to basically see any effect of the policies, you have to wait months or a couple of quarters. In the UK, everything happens like very quick, like this, in a couple of months. So that's a good reference of what's going to happen in the US as well.
Yeah, but don't forget that the UK is doing a U-turn on the budget policy of Truss.
But that was only the 5p or the 45p thing. They cannot do any, if they do a U-turn, like they are basically now between going into a recession over the next few months, or basically letting a Lehman Brothers type thing happening. Those are the two options, and that's why you see the Bank of England intervening the gilt market, because at this range, 6% of interest rates, it's not sustainable. The whole asset repricing basically the bubble that we created in the last 12 years now is about to burst. So I don't think there is any nice option. It's either you go for a few months of a recession and you keep raising interest rates, or you let a Lehman Brothers type thing happen. So yeah.
Just my 2 cents. Bank of England, England in general. I mean, the highest they were, I believe it was in 1971. Don't quote me. Was at like 7.7% around there. So I don't feel like they're at that peak yet. So I think they'll start worrying once they get towards like 6.9. I'm not trying to like compare 1970s to now. We're obviously in a different generation, but we also have to kind of look at, they did learn from that lesson within some respects. So there's a little bit of easing within the respect to the tools that they're able to use, and nothing to take apart from what you said. I think it's on spot, but we also should keep that in mind.
Yeah, it's very different economy if you compare the 70s with the current one. You have the demographic issues, you have the productivity issues. Like the debt ratio is also, quite different. I kind of agree.
So quick question, folks. CPI out. I'm currently driving and on my phone, but I just saw the SPY went from up 1% to down 1%, 2% shift. I assume CPI printed high, like 8%.
Yeah,
Do we data yet?
8.2%. 8.2.
It rose 0.4%, which was 2 points higher than they were expecting.
As I've said sorry for interrupting. I just want to say, as I've said every time, the pre-market, please don't make that indicator to how the market will perform today. It's an easy way to trap us.
The expected Fed funds rate is now up about 2% more to 4.83. The expected future Fed funds rate, I believe it was for June.
Yeah, I had YOLO'd into near-dated SPY calls, and by near-dated, I mean very near-dated. So, yeah, those are wrecked. That's all right.
So it's too late to act on, movement that's happened already. So I think what I'm interested in is where people think the next resistance point is going to be for this drop. Now, I'm personally anticipating that SPY is going to continue to go down to probably in the 330s, and that's when I'm going to start buying calls again. But
straight TA, there is no resistance above like 325. There's nothing between here and there.
Nothing between here and 325 is what you're saying?
If you're looking at like grade 12 advanced charting, like the most basic TA, yeah, there's nothing between here and 325.
325.
What TA are you using for that? Fibonacci, RSI? What's your like?
No, bro, just literally looking at the chart, zooming out and looking at the last low points where high volume was, you know what I mean, where there was buying, and the next one is 325.
Yeah, I was looking at a
descending
triangle.
Trust me, bro. No, but in all
triangle.
seriousness, the 340 and 350 is where your next targets are at. You can zoom out on a 20-year chart and look at it from a monthly scale rather than a weekly or daily, just to get some more consolidation.
You think we might see SPY below 300 ever?
My fear here is that a lot of people are looking at this dip as like one of the most recent recessions, and I think we really have to at some point start looking at it more like the 1920s, where the market dipped, went way back up, and then over the course of 2-3 years, it kind of tanked and bottomed out for a while. And so I think we should be looking at a decline all the way through 2023.
I bought long SPY at 275 strike.
Human, we barely heard you. You kept cutting in and out.
Oh, sorry. I bought long-dated SPY puts March and June at 275 strike.
Just some plays that I'm going in today. I will be going into JPM, of course, and then I will also be trying to find a call side for FedEx. and I was looking at Baba. Baba played out well yesterday, and I was in Pepsi calls. I know you guys were all bearish yesterday on Pepsi, but luckily that played out well. So I'm starting to think that the food industry, there'll be some nice plays there to play on. I don't know what your feedback on that is.
I bought puts on Coca-Cola after they went up in sympathy with Pepsi. Yeah, I'm not expecting that they can do much better than Pepsi already said in their report. So even if they beat earnings, but they can't make the same promises like Pepsi did, they will go down.
Historically, Coke has outperformed Pepsi. Bold play. I like it.
True, but because, in my opinion, Pepsi has more market share to gain than Coca-Cola, so the growth from Pepsi was pretty reasonable, and I don't think that Coca-Cola can compare now with Pepsi. Like, there's no way that they can make the same statements for next quarters with the insane amount of revenue growth that Pepsi is expecting.
So an article this morning that an energy drink had gone bankrupt. I think it was Monster. It doesn't sound right, though.
Monster is owned by Coca-Cola, if I'm not wrong.
Yeah, let me look. I'll see if I can find the article.
I do think, we might be approaching a capitulation. Comparing this to the 1920s, though, what I will say is that in 1918, you had the pandemic. In 1919, you had a 15% CPI. Interest rate was roughly 15%. Then the feds got it under control. In 1920, they had an interest rate of just above 3%. And then we saw the most face-ripping rally of all time. Over the next several years, the Dow Jones 8x'd. So, I mean, keep in mind that if this inflation does come under control at some point and you're still on the short side, you're in for a bad time because historically speaking, coming out of a high inflation environment, that's some of the strongest rallies in the history of the stock market. So I agree.
The direct quote from the here, okay, there we go, was successfully passed on some inflation to the consumer. At some point in the next 3 to 6 months, that ends. I'd be careful long on Pepsi.
But it was Bang Energy that is going bankrupt, and it's a Pepsi. They had a Pepsi or deal with Pepsi, and I guess Pepsi canceled the deal, and now Bang is fucked.
Sorry, what's the name?
BANG. Like what your boyfriend does to your wife.
Okay, yeah, Bank Energy. Yeah.
Bang Energy, yeah. It's not all over the world, but it is mainly in the US, I think. In regards to, I had a weird thought, and I just kind of bring this to the table. I had this idea that basically, what if Coca-Cola is a premium brand and Pepsi is a more generic brand? Because I've noticed that when you go in the grocery stores, wherever you're at, you will notice that a lot of the tier brands, the more expensive ones, have pulled their premium branding products and just kind of kept their simple ones, and then gave room for the generic brands. But then my question was, is that going to play a role in our heads where we're like thankful that those generic brands were around so we could afford them, and then we'll continue to purchase them? Or are we going to go back to, okay, recession is over and now we can go back to the expensive brands? I know it's kind of a blanket statement, but I'm just curious what you guys' thoughts are on that.
I don't know. Personally, I think soda is on the way out, but I think it's a long way coming. So I think in general, that we should see over the next 10 years or so, the whole thing go down.
It doesn't matter. They will just rebrand some stuff like they did with Coca-Cola Zero and make healthy pop drinks, stuff like that. They will definitely keep on having massive revenue.
Actually, Coca-Cola is a massive acquirer of drink companies that basically perform very well. So yeah, it's like Microsoft or Google in the tech industry. They basically buy out the tiny competitions and the innovative ones, so the trendy ones. So yeah, I'm not sure about Pepsi. I know very well Pepsi from in the past I used to work for them. I know they have a a massive supply chain, at least in Europe. They are basically competing with uh, supply chain, in the supply chain industry, because all other manufacturers basically use Pepsi's supply chain to distribute their products. Okay. And also their Lays or the Walkers, I think in the UK is called, the chips. They are very strong in that. And the drink depends on country's culture. For example, you have some countries where no one buys Pepsi, right? Because they are used to drinking Coca-Cola, and they could never ever achieve any market share in those countries. So the only strategy Pepsi follows was basically to follow the prices of Coca-Cola cans, let's say in the supermarket. If it was at 80 cents a can, the most Pepsi would do is basically decrease their selling price to 78 cents or 75. That was the only thing they could do to compete with Coca-Cola, But yeah.
Okay, apart from marketing, where they place drinks and stuff from a psychological standpoint, you can read that online. I'm not sure what to look up, but just look up psychological placement of consumer products. I wasn't meaning to go on a tangent about Coca-Cola or Pepsi. I was talking about in general sense what people's thoughts were on premium brands going away and having more generic brands and obviously the production and the quality of the product would be down. So we'd be all eating shitty food for a cheaper price. So they would save money anyway. I was just curious if anyone want to touch on that.
I think even in the last recession, there were still plenty of people who were buying, name brand products.
Yeah, there is a possibility, of course, that people will switch to the off-brand, like the in-house brand, so not premium brand Coca-Cola or something.
I think a much more interesting play, personally, is, and I'm sure a lot of people are going to laugh, but like the legalization of marijuana. I know Coke and Pepsi both, I've seen where they've done research into making like THC drinks and selling them. So I think it would be a big boom if we ever get that far.
Yeah, you have too many kids that would take advantage of that. I don't see that happening.
I mean, Coca-Cola had cocaine in their shit. They'll put THC in it all day.
I don't disagree with that fact.
I think that if we're talking about the whole premium versus store brand, in the store I work at, I generally see a more overall volume being bought of the store brand, but in terms of just regular purchases, I do see the more premium stuff bought, but in smaller quantities.
So are we talking about maybe like a play on some THC company partnering with Pepsi or Coca-Cola? Or I'm a little confused here. What's the play?
Well, I'm talking about two separate things. The play for marijuana would be if we ever get to a point where it is very clear that we are going to legalize this on a federal level, then we would start to see Coke and Pepsi and products like that, and even like Betty Crocker and shit making, everyday THC products, I think.
Oh, the pop brownie mix, that would be hilarious.
I mean, how long would it take for that to be represented in the stock price, would you say?
It would take ages, because you've got to look at Coca-Cola as a global brand. Think about how many countries still have to legalize THC before they're going to be able to put it in drinks, right? Even if they are selling it in just the States or Canada or wherever, they're still going to make up for the rest of the world. So you've got to look at their entire global sales when you've got to include this new drink, right?
And even if everything goes very well, it'll only form, like you said, like a small percentage of their revenue. So is there like a smaller company where such a change would like have a more material impact?
If I had to guess, I would say it'd be the higher end brands of distributors, because they're going to be the ones that end up with the contracts with the massive companies to provide them with the weed or whatever.
I think the barriers to entry in a market like the drinks industry, right? The barriers to entry are too high for anyone to actually bring in THC drinks soon and it to make an impact soon. Like over the course of the next 25 years, maybe, but not in the next 6 months.
I'll check. Like the next time that I go, I smoke. Don't get me wrong, but the next time I go to the shop, I'm pretty sure they already have Coke and Pepsi drinks in there that have like Delta 8 THCM. I think they're already making them, but I may be wrong.
Don't they have drinks that you can buy that already have the THC in them? So technically, it's just like buying liquor and a Coke, and just mixing the two. Does it really need to be combined here, guys?
I mean, a lot of the Coke products that are sold at vape shops or similar looking products are actually just like hidden containers. Like you can unscrew the bottom and store shit in them. They're not actually for consumption.
So that's what I thought too. And they definitely have a section that's like that, but they also have a refrigerated section of drinks that are THC specific drinks or concentrates. And I've never bought the shit. I don't want to mess with it really, but I'm very confident that there is name brand products in that refrigerator, and I will look the next time I go.
Yeah, here at least we have some people, like we have one drink that's a startup company called Wonder 2. My wife's sitting next to me. She's heavily involved in the industry. And so none of these are like publicly traded yet, but there are THC and CBD drink manufacturers that are private that, might be good to keep an eye on. Also, on this play, I'm not an expert in this field, so what I'm looking...
I think we lost you, Skull.
Perfect time.
Can you hear me now?
Yeah.
Hello?
We got you.
The ticker is WEED, WEED. Because I'm not an expert in this industry, just looking at that ETF, especially since we're talking about having some pretty red days ahead, I'm just going to look at picking up long-dated leaps on WEED, the ETF, and they have grow houses, commercial property, as well as individual cannabis manufacturers, all included in the WEED ETF. I believe last time I looked, I think they had 39 different holdings. So I'm just going to look at that. When the market goes down, I'm just going to buy leaps on WEED.
Is that just US marijuana, or is that Canada as well?
That's Canada as well. They definitely have exposure to the Canadian companies, for sure.
I know Aurora is in Canada, I think. Opinion is Aurora, I don't know how to pronounce it. Is that a Canadian weed company? And I think they came to America or something?
Yeah, I believe so. I believe they're all Canadian just because of their regulatory environment in Canada is more favorable for them.
Yeah, that's what my understanding too, is that Canada is more progressive on the legalization, right?
Yeah, I believe it is legal here.
We are fully legal here.
No, Canada's less strict with the regulation and everything. But the downside to that is they're charging insane prices of dispensaries. People are still going to go to their plugs and shit because the prices are insane. You're charging like 45, equivalent like 45 British pound, I don't know what that is in dollars, to probably $45 to get like a 3.5. But that's insane prices if you look at it from the standpoint of before it was legalized.
Well, I guess regardless, like a lot of these companies have fairly sizable revenue, and I think their market cap is a little bit too large for their current size, but I think it's all predicated on the expectation that they'll be able to expand to the United States. But I don't think like we're really getting anywhere with some of the discussion around like plays around this. So I don't know if you guys have like closing thoughts or if we should move on to something else.
I think we should move on. The SPY's down 2% right now.
I do have one last play on this. I mentioned WEED as like the ETF. I would also like to call out MO, ticker MO, Altria. Obviously, they're in traditional tobacco, but as we all know, Big Tobacco is already prepared for the legalization of weed. They've already done branding. They've already secured supply chains. Also, Big Tobacco performs very well in recessions. They recover faster than most other stocks. So looking at picking up MO on the cheap or Philip Morris could be a good play.
And that's my final thoughts.
Yeah, just to add to that, yesterday I bought Philip Morris calls for June. Strike $100. Yeah, what you said about the recession, I think those brands will do really well. And I also have Coca-Cola puts.
Isn't that very far out of the money? Is it at 40 or something right now? 45? If you're talking about MO?
No, I'm talking about PM.
Hey, he's talking about Philip Morris, which is ticker PM. I was talking about MO.
Okay.
All right, let's move on to another industry. I think we've hashed this quite a lot today.
All right, I'm gonna update one of my plays that I spatted out here about a week ago because it's not doing very well, and I just want to be honest. So I was pitching Carnival, if y'all remember, a couple weeks ago, and it's not doing well. I'm still averaging down. What's the line? I was early, not wrong, but same thing. So I still have faith in the bullish case for Carnival, even though.
Philip Morris, which is ticker PM.
Market probably even worse than the rest of the market being released is still you're gonna see some increase in profit and probably some huge beats in their report coming up. So I'm sticking to it. I'm averaging down. I still think Carnival.
And going off of that Carnival play, I was looking at that last night, and their earnings that they just released September 30th, they got their revenue back up to 4.31 billion, which the prior quarter before that it was only at 2.4 billion. And the vaccine restrictions in Florida and everything for like cruises just got dropped.
It's not just Florida. It's not just Florida.
And going off of that Carnival play, I was looking at that last night, and their earnings that they just released September 30th, they got their revenue back up to 4.
Of Carnival's ports, everywhere Carnival dropped it for all their cruise lines.
Correct. Yes, and in 2020. Because everyone was, they were faced with those COVID restrictions. But when you look at their balance sheet, I mean, it's not too bad. I mean, they have a lot of cash on hand from that.
Everywhere Carnival dropped it for all their cruise lines.
Correct. Yes, and so this next earnings coming out in December is going to be a realistic earnings. They've never recovered technically from that.
Thanks, Coach. Yeah, I really agree with that assessment. And yeah, it's like you said, their last report. I don't think it's been fully priced in. And what you said, they have cash on hand. They're poised for a good comeback, and we might not see it for the next 2 or 3 quarters, but when we do, my target price for selling or for taking profits is going to be between 10 and 15.
Or in November, depending on how the market goes. But Carnival is a good play, and it's going to recover. And
chip manufacturer from exporting to China, if I'm not wrong. I don't know if you know. Well, probably you do. It's this company ASML, which is I think it's unique in the world because it manufactures the chip making equipment that companies like TSMC and Intel needs to basically manufacture the advanced chips, right? That's kind of on my list because seems like ASML is considering something, through the US, whether to keep exporting or not. And I think now you have a discount. Like today, I think it's falling more than 10%. I think this is a long-term player, so I'm just keeping an eye on this stock to basically buy and hold in the near future. And TSMC, I think, got the exemption from the bill for at least 1 year, so they can keep trading with China. If I'm not wrong, that's what I read on the Wall Street Journal this morning. And also the P ratio of TSMC. Oh my, it's 15. It used to be like plus 30, or 40, and now it's down to 15 PE ratio. I don't know. What's your thought on TSMC for the long term and overall chip industry?
Yep, I agree with that. In the long term, I'm buying. I'm loading on semiconductor stocks. I said it yesterday. Yeah, I like TSMC, ASML, which is the company that provides the machine to create the semiconductors, right? The lithography machine. So it's very important for this. Semiconductor is like the new oil, right? There's
yeah.
So that's what I'm loading on dollar cost averaging on semiconductor stocks. I like TSMC, Qualcomm, MU, anything from the U.S. specifically, and companies also that will benefit from the CHIPS Act also, right? So those are my plays.
And if you guys aren't aware, ASML is in the Netherlands, I believe. And TSM is it South? Is it
Taiwan? ASML is a Dutch company, yes.
Yeah, and the
other
TSM
one
is in Taiwan, right?
Yes, but they have a fab in the U.S. and they are building another one in the U.S. to take advantage of the CHIPS Act.
Are you talking about they have warehouses, laboratories? What are we talking here?
No, fab. They manufacture semiconductors. There, no, not a
Can
warehouse.
you spell that for me?
FAB. What the ticker?
Yeah, the ticker.
TSMC. TSM.
Oh,
Sorry.
TSM. Okay.
TSMC, and the other, the Dutch ticker is ASML, and it trades in the Dutch Stock Exchange, the Netherlands. I'm not sure if they have this ADR thing in the US.
Yeah, they have ADR over the same name.
Yeah, precisely the same name. Precisely. Yeah.
Do you guys think that the new rules from the government are impacting semiconductors globally outside the United States?
Definitely.
What I do know about China is that they've come out some reports basically stating that it's going to put a really grip on Americans that are working over there, especially for if they're over there for contracting purposes or whether or not they're just there as a white man. What that means is they're just there representing as a business, so it makes them look more global. And that's going to have a little harsh reality on them. But I really don't. It's a lot of talk from White House. I mean, we've been talking forever. They're going to give out semiconductor money for Intel and Micron and all those AMD and what have you, and nobody bats an eye. They're just like, oh, sorry, we can't. Intel comes out and says we can't expand our warehouses because we don't have the bill. I mean, it's a lot of BS, a lot of just run around. And so until there's a real bill being passed and many signatures on that bill, I think it's all speculation at this point.
Yeah, but the reality is that we need those semiconductors. Like 15, 20 years ago in the U.S., more than 20% of semiconductors were fabricated in the U.S., right? Now that's not happening at the moment. So, and then what happened with the COVID-19 situation, right? That we had less semiconductor. It affected the car manufacturing, everything, right? Because everything has a semiconductor, your TV, your cell phone, everything. So that's why it's the new oil. So I'm betting on the semiconductor industry in a long term, like to 2025. I'm buying stocks. I'm cost averaging on stocks and also leaps. So keep in mind that the companies that will benefit from the CHIP Act will be companies who design chips, and then there's different benefits like incentives, like tax credits and incentives, based on if they design on the manufacturer. The biggest benefits are on the manufacturer. So that's TSM.
And I don't disagree with you, but just as I mentioned yesterday, Google is going to create their own CPUs and their own semiconductors. We know Apple's already working on their increasing it. So
actually, Google is they created already semiconductors with Intel. They joined forces with Intel and they created a new semiconductor.
Right, and they've
continued
talked
that relationship.
Correct. But they've actually talked internally, and you can read their latest press release
Yeah,
where they discussed that divorce, if you want to call it,
they are
of a relationship for the future.
They are designing semiconductor, not fabricating them.
Yeah, and that's the key, because why TSMC became so, like, the US is basically supporting Taiwan because of TSMC, right? It's not just because of whatever they are telling you on the news. So basically, TSMC has an advantage of 40 years of knowledge.
Mm-hmm.
Even China is struggling to get that. So it's not just signing a bill or whatever agreement of Google and Intel.
I stand corrected on that, and I appreciate that insight. So they are manufacturing it, and Google and the rest are basically designing it, and they will still behave as manufacturers. So thank you.
Yeah.
So then, okay, and maybe too much, and you guys cut me off if I need to, but I'm wondering now if this is the case, and we've made the move on semiconductors that we have, and China is struggling there, and Taiwan seems to be one of the biggest producers or most knowledgeable or whatever, doesn't that make it more likely that China's going to invade Taiwan?
Well,
I think sorry. I think this is diverging a little bit too far from actual investable or technical ideas. I do appreciate the conversation though, but I'm curious, where is this all leading to? Are you saying, long,
puts on Intel?
Short?
The reason I'm asking is because the semiconductor industry should flip on its fucking head if they invade Taiwan, right?
So if you believe that they will, so what does that mean?
I think he's asking for more plays instead of a conversation. So
yeah, I got
about that opinion.
Yeah,
go ahead.
We have fabs in the US, and I believe that we will win the semiconductor race, right? If we keep in the track that we are in the US. That's my point of view.
So how are you putting your money on the line?
Yeah. Well, as I said yesterday, I'm holding stocks. I'm back holding Nvidia at the moment. I'm losing a lot of money there. I'm holding dollar cost averaging on Taiwan Semiconductor, AMD, Qualcomm, Intel, also, and MU. Micron Technologies. Tickers are MU, INTC, Intel. Qualcomm is QCOM. AMD is AMD, and TSM. Also, I'm buying stocks on SOXL, which is an ETF, 3 times leverage. It's a risky place, yes, because it's 3 times leverage. But I'm buying the stock and I'm selling cover stock on that one. I'm averaging dollar cost averaging on that one too. At the moment, it's at $6, and with the news of the CHIP Act, it was at 20. So yeah, that's my play. Those are my plays.
It's awesome. Thank you.
Hey guys, sorry, go ahead.
Oh no, I was just going to call on you to say go ahead.
Okay, cool. Thanks. So I'm seeking some non-financial advice. I'm holding puts, which I'm not really worried about now because of the CPI. But I'm holding some calls. Some of them are short-term SPY calls. Others are on a couple of companies at least 1 month or 2 months out. Is anybody in the same position, and how are you going to treat your calls after the CPI? Are you holding on to some? Are you selling all? What's your strategy? And do you think there will be a reversal?
Well, I'm selling calls for sure.
Just my advice is to stop trading or stop betting on 1 day or 2 days options?
I don't concur with that statement. I think it's quite the opposite. I think we have such instant changes overnight that we have to really make same-day moves. If you're comfortable on holding NVIDIA and losing your ass on it, those kind of plays, then that's fine. I'm all for that. I like seeing that.
Okay, so nobody like I mean is that now that's okay. So that are we expecting a bottom before November Fed meeting? So with calls being held for January 2023 for legit companies, are we expecting a bottom? Are they worth keeping, or maybe exiting them now and re-entering post November FOMC?
Maybe wait for just right before the earnings if the situation doesn't get even worse, right? So you can at least benefit from the volatility.
Right.
Well, what I'm doing, as I said, I'm buying at the moment. I'm on a buying, but I'm not buying with all the money that I have at the moment, but because I'm waiting for. I don't think this is the bottom, right? But the fear and greed factor index is at 19 at the moment. So we are playing against the big money, right? Most of the retail investors are getting out at the moment. So it will be very difficult to trade at the moment. Okay. So for example, yesterday I played with Hardy that called on the SPY. Right, I bought $360 SPY calls for the 14th for tomorrow. But also I hedged my position. I created a credit call spread, vertical, right? Just in case my calls like it went tits up, right? So I protected myself with that hedge, so I'm good. So that's I think that's the way of trading right now. That's my 2 cents.
I think it's going to be a green day, so please buy all the calls you want.
Really? You think it'll be green?
Yeah, I think you put green in. It's going to mean it's going to be green today.
I think he's fucking with you.
Yeah, I actually agree with that.
You call it Brian, right?
Yeah, CPI went down 0.1%. Woohoo!
Awesome.
There's sorry, go ahead.
That's all right. I'm just going to cut in with one more automotive motif play. Yesterday, I had a rep come in and pretty much assure me, and a couple other people assure me, that a company named Credit Acceptance Corporation, that is CACC for the ticker, experiencing high repos right now. I'm going to go a long-term put on it, probably 3 to 6 months. They're going to see a lot more over that term. Right now, they're hanging in the 460 area. They've been as high as 650. They're down to the height they were at the top of their pre-pandemic levels. They were predicting almost $10 a share for coming up at the end of the month. I believe they'll fall well short of that, and I'm looking to buy at the money. Long term, they are pretty costly, but maybe long term for me is 6 months to hold something. I believe we're going to see a lot of action there. There are a couple tickers that are under market cap. That one's 5.69 billion. I suggest if you want to go out and find some other ones, but this is the one with the I think the most room to move.
What did you say that ticker was again?
C is in Charlie, A is in Apple, C is in Charlie, C is in Charlie. Credit Acceptance Corporation.
Do we want to talk about the rail strike today?
As far as I'm concerned, they were talking about yesterday and said it has to wait 30 days before there's a new strike. So it's pretty much a pending paused issue.
The only new information.
Just to talk about the play firm, I just wanted to add on what OK Helicopter was talking about. I did also on some digging based off of his play yesterday on AutoNation and some other auto sales companies, so Sonic Automotive. Also, I did kind of a deep dive into their Q2 and Q1 of this year, right? And I looked at the cash flow. Right now for AutoNation, it seems like it's very good, but it has come down quite a lot. Like their cash flow was from 600 million to around 300 million from the first quarter to the second quarter. So what I'm thinking is that they overbought on their inventories. Basically, what these companies do, right? They buy cars at MSRP and they sell them back. And I think they overbought. And yeah, how you say is the chicken is coming to roost.
That's a good point. And also with AutoNation, the reason why I like that play is they have their own finance company. Speaking to a couple of their salespeople yesterday at a few local dealerships, September was way worse than last year. So not only did they overbuy inventory, but their finance company experienced losses, I believe, for the upcoming report.
Yeah. So thanks for that play. And also, if you're more interested on this subject, I recommend that this YouTube channel called Your Advocate Alliance. They break down the impact of like CarMax earnings and other car resellers on the sector. So yeah.
With all the car repos, are we going calls on Netflix and bicycle companies, or what are we thinking here?
No, just put on those those companies we mentioned, right? So AutoNation, CACC, the credit company, SAH, right? The ones you mentioned yesterday.
Yeah,
Correct.
I know. I was just asking, should we buy calls on Netflix? If no one's driving, they're going to be at home. And then so I'm also wondering if we should be buying on bicycles. How are they going to be traveling?
What you should probably be buying for the upcoming announcements after they're announced and now forward, you probably will see an uptick in Uber and Lyft revenues. They've experienced some downturn last few days because of the White House saying that they're going to change employment status for these folks and not allow so many to be independent contractors and have them have to be employees to get benefits. So they took a hit in the last few days. But if you don't have a car, say in New York or even in Pittsburgh or one of those cities, you can take an Uber for $30 or $45 from the airport to Monroeville. So those companies, as the car repos continue to happen, will see an upswing. I don't think we've hit the peak of the repo season yet, but as they start announcing them, you're probably going to see more in the next couple quarters. That's why I suggested long puts, 3 months, 6 months on credit acceptance. I'm going to do some for the end of the month because they announce on the 31st.
I mean, if they can't afford to make car payments, how are they going to be able to afford $200 a week on Uber and Lyft?
It's not that they can't afford the car payments. A lot of times it's the upkeep or their car can't be fixed or other situations like that cause those increases for I have some customers that their credit goes bad because of a repo and they can't get another car. So now they're forced to either rent one or do that. So you could be looking at car rental companies as well. I have customers paying $1,200 a month for a car rental because they can't get finance on a car.
And as someone who's used credit acceptance, they're an awful company and they approve basically anyone in any car. And a lot of these smaller car dealerships are attracted to credit acceptance because they approve young people for 24-26% interest for a car that the dealer just bought from a auction for $500. They'll sell it for $8,000. Literally, that's what a credit acceptance does. They've gotten in many lawsuits, and I don't believe their company's going to last.
I can attest to that because they go off of a heavy fee schedule to the dealers. So what that means is if they do an $8,000 deal, the dealer has to pay a $2,000 fee out of their profit. So if they have a $4,000 profit, that became a $2,000 profit because of the fee that credit acceptance charges to the dealer. They'd like to make more than 21% in PA, and they can't. So they make the extra percentage as charging the dealer an actual cash amount of money.
It sounds like Santander all over again.
Well, Santander actually got better. Santander actually turned into Chrysler Financial Corporation. So they do new cars. When they were Drive, Santander was initially Drive. They were They were like a credit acceptance. They bought up, I think it was City Financial, and became Santander. So they did a little more better loans, but they still charged high fees. But when they took over Chrysler Financing, and I hate that because that goes against one of our guys' Stellantis moves, but Chrysler Financial is the old Santander.
Cool. So this is a business model. Open up a CACC, then turn into a Santander, and then follow suit. Okay, sounds great.
You guys have reminded me, I'm pretty sure that I remember in the last recession that the check advance places were popping off. And I'm wondering if that's going to start to happen again, if that's something we could trade.
Great idea.
If I remember correctly, Affirm actually fell on its face. Remember, they popped up because it was one of those things during mid-COVID, if you may, like, okay, we're going to start turning to this. And then when they started coming out with earnings not too long ago, it fell on their face. So I'm not really sure how to play those.
Yeah, I'm not either. I know, I do distinctly remember in the last recession, like 2008, that whole era, that there was a lot of articles and stuff talking up like rent to own and check advance places.
So what I can tell you is that as a result of the boom in check advance places and the price gouging that they did, a lot of laws went into place to really restrict how those companies operate and how much they can charge you in terms of interest.
I remember this.
It's not as profitable as it would have been during the last downturn.
I remember that also. It's like they limited it because it was like 600% gains or something like that. I remember that whole legal case.
No, what a lot of people don't realize is that when you have companies like Affirm and Dave, the ones who are kind of like, hey, you don't really have to pay us a set amount, you can like leave a tip. So if you pay a 10% or 15% tip on a 1 week loan, that's actually a pretty high interest rate, but it's technically not them charging you a high interest rate. That's you giving them money for free. So you kind of subvert some of those rules by allowing you to tip the company.
It's interesting. I hadn't even really thought about that.
Because the first thing I'm going to do is tip the guys who are charging me interest.
I had a question, changing pace a little bit here, if we're done talking about that.
Go for it.
I'm pretty new to this, so bear with me if this is a dumb question, but I heard someone mention the JP Morgan play earlier, and I think they have an earnings call coming out tomorrow. And I was just curious what you guys' thoughts on how you're planning on playing that, if it's expected to be, a good call, bad call.
They will probably beat expectations, but revenue or profits will be down. Today was BlackRock earnings. That's 16% less earnings than 1 year ago compared to that quarter. But yeah, they already dropped a lot in sympathy as well, and also on CPI. So buying push now maybe be too late for tomorrow. But
We're about 5 minutes before the market opens. I know there's a lot of commentary, a lot of comments in the chat saying we're just kind of blabbering on. I do apologize. Can we get some fireplace going? Is that okay, opinion?
Yeah, absolutely. Just fire them off. Feel free to recap what you've already said. I think a couple things I've seen in the comments are, people talking about the gig workers coming under fire. So that's like Lyft, Uber, and similar companies.
So I'm planning to pick up a couple hundred shares of UEC, that's Uranium Energy, and I'm going to be selling covered calls on them over the next couple months. They just acquired a mine from Rio Tinto in Canada. I think that the alternative energy market is going to do really well as we kind of struggle with OPEC over oil.
I got a quick question. If you got in a SPY play from yesterday, which is obviously a disaster. Are you guys gonna dump those calls at market this morning, or hang out till tomorrow and see what happens?
Oh yeah, I'm dumping out.
You'll know what the market's doing by about 11 o'clock. Usually, you'll get the pre-market move. We'll get, like, if there's going to be a turnaround, it'll happen by about 11 o'clock.
I'm switching my place to a firm.
I don't think there's going to be a turnaround, which is bad news.
Just a second, guys, and I'm new to this too. But as far as plays go, I noticed that Apple and Snowflake have been underperforming S&P 500. They're like the worst. I had a Snowflake calls yesterday with like a 23% return, so I'm just going to continue holding. But yeah, as far as plays go, I think that those two could be considered.
So I have puts on Campbell's, ticker CPB. I have November 4th, $44 puts. The thesis there is the tomato harvest this year was supposed to be pretty bad, and they have a lot of exposure to that, specifically with their pasta sauce brand Prego.
Wow, nice.
Any other food?
If I could talk real quick.
100%, go for it.
I want to talk about IIPR. This is something I post about quite a bit, puts, for two reasons. One, you're in a period of the month where if they have received or put out a default on their second largest rent payer, which I expect will happen either this or next month, the puts expiring in October would be the play, the 95s or the 90s. Also, if IIPR's range has been very reliable from basically 96 to 88, and obviously we're drilling to the core of the earth today. So I would put a play on the 95, 90s expiring October. That's it.
I'm going to be getting some CWH Camping World Holdings puts. Obviously, if people can't afford cars, they're not going to afford campers. I could be wrong there. Obviously, people might find some stash money and buy some campers, but I just don't see it happening with gas prices.
Think that they're going to sell their house and buy a camper to live in instead?
The house I just got, the guy literally did that. I bought a house from a guy who sold his house and bought a 42-foot camper.
That's awesome. All right, with 2 minutes before market opens, I just want to give a shout out to myself, I guess, because I finally got the Twitch and YouTube channels working. So if you guys want to watch back a recording of this and you actually want to see who said what, you're able to do that now. And going forward, hopefully I'll also start getting like live charts up of whatever people are talking about at the time, as well as live comment feed that incorporates Reddit, YouTube, and Twitch comments all in one feed. The one thing I did want to ask of all of you is, if you did subscribe or follow or whatever, can you let me know if when you are getting the notifications that something is live? Because I'm wondering if they're faster than Reddit. But other than that, I'll get off my soapbox and let us wrap up the call with a couple more plays, I guess.
That's awesome, Opinion. Thanks for doing that.
Yeah, appreciate it. Puts on they went up massively on the news that they're allowed in the Google Play Store, but that's just a temporary boost of 8%. They will definitely go down next couple days.
On who?
I'm buying calls on SQQQ.
DWAC.
DWAC.
Okay, awesome. Anyone else?
Puts on ITB. It's the ticker, U.S. Home Construction ETF.
All right. Thank you so much. And that is the bell. So we're wrapping up here, and we'll see you all tomorrow.
Good luck, guys.
Separate.